All right, let's dive right in. We're tackling CPKC's Q2 2024 earnings today, and oh boy, do we have some stuff to unpack. We've got the presentation slides, the earnings release, their supplemental schedule, and even a full quarterly report. We're going deep.
Wow, you weren't kidding when you said a deep dive.
I'm all about thoroughness. But seriously, we'll cut through the jargon, pull out those fascinating details, and figure out what's really going on with CPKC's performance. Let's start with the big one, revenue. CPKC is reporting a 14% jump compared to last year's second quarter. Pretty impressive, right?
This certainly grabs your attention, but we've got to remember the elephant, or rather the railroad in the room, the KCS merger. This is the first full quarter where we're seeing that impact play out.
You're totally right. Easy to get lost in the headline number.
Yeah.
Lucky for us, CPKC actually did some of the legwork. They provided a comparison to a hypothetical combined CPKC before the merger. Turns out, compared to that, revenue is only up 8%.
Right, so that 14% isn't all organic growth. Part of it is just CPKC being a bigger company now.
But hey, 8% growth still ain't bad. What's driving that, you think?
Well, a few things seem to be fueling the fire. Their energy, chemicals, and plastic segment is doing really well. Looks like increased Canadian crude oil shipments are a big factor there. On top of that, they saw a pretty significant uptick in volume for metals and minerals.
So infrastructure projects picking up steam again. That's always good news for railroads.
Exactly. It suggests CPKC is benefiting from some broader positive trends, not just internal changes. We're seeing a combination of their own growth strategies and a helpful external environment.
That makes a lot of sense. But the big question is, how sustainable is it? Are there fundamental improvements within CPKC that tell us this growth can continue?
To answer that, we need to shift gears a bit and look at their operational efficiency. And let me tell you, they've highlighted some pretty remarkable improvements. For instance, their average train speed is up 6% compared to the same quarter last year.
Wow, 6%. That's got to be tough to achieve, especially when you consider, well, I'm guessing they didn't just add more trains to the tracks.
You're right, it's not that simple. What's fascinating is they actually achieved this speed increase while decreasing their average train length and weight. It's a real balancing act, and it shows they're making strides in optimizing their network.
It's like they're learning to do more with less, getting more efficiency out of their existing infrastructure.
Exactly, but, and there's often a but, isn't there?
Oh, there's always a but. Hit me with it.
Their fuel efficiency dipped a bit. Just a 2% decrease, but still something to note.
Yeah, I see that. Should we be concerned about this dip?
It's definitely something to keep an eye on. Lots of things can influence fuel efficiency, weather patterns, changes in cargo types.
And, of course, the integration of a whole new rail network with the KCS merger. That can't be easy.
You're absolutely right. Too soon to sound the alarm, but definitely something on our radar. It's a great example of how we need to consider the bigger picture when analyzing these numbers. Now, on a more positive note, CPKC reported a very substantial improvement in employee safety.
Well, that's fantastic. Always good to hear about companies taking safety seriously.
Absolutely. They saw a 38% drop in FRA reportable personal injuries.
Wow, that's a huge decrease. For anyone who's not familiar, can you give a quick explanation of what FRA reportable means in this context?
Of course. FRA reportable personal injuries are specifically defined incidents that fall under the Federal Railroad Administration's reporting regulations. This improvement suggests CPKC is making some real progress in creating a safer work environment, which they attribute to an increased emphasis on safety training and improved operating procedures.
It's great to see them prioritizing employee well-being alongside operational efficiency. But how do these efficiency gains and safety improvements actually translate to their bottom line? That's what we really care about, right?
That is the million-dollar question, isn't it? Well, their reported diluted EPS actually decreased this quarter, down to $0.97 from $1.42 last year. However, they're really emphasizing what they call core-adjusted combined diluted EPS, which paints a much more positive picture.
Okay, hold on. We need to break that down. Core-adjusted combined diluted EPS. That's a mouthful. Why don't you walk us through it?
You got it. Remember how we talked about the KCS merger and all those costs associated with it? There were a lot of moving parts during that transition.
Oh yeah, tons of complexity.
Right. Their reported EPS includes things like acquisition-related expenses, those complex measurement period adjustments for KCS. It gets very messy.
So not a straightforward comparison to last year's numbers because of the merger.
Exactly. That's why they highlight the core adjusted figure. It removes those one-time merger costs, giving us a clearer view of their fundamental profitability. It's like peering through the noise to see the real signal.
Got it. That makes sense. So what's this core adjusted EPS telling us? Good news or bad news?
This quarter, it comes in at $1.05, which is a significant jump, 27% from last year's adjusted figure.
Wow, 27%. That's huge. Sounds like they're handling the merger fairly well then, at least from a profitability standpoint.
It's early days, but the signs are encouraging. But now I think it's time we dig into some of the less obvious details buried within these reports. What about you? Find anything particularly interesting?
Oh, absolutely. They dedicated a whole slide in their presentation to sustainability leadership. Turns out, they've set a target to cut their locomotive emissions by a whopping 36.9% by 2030. That's ambitious.
It is, and it really reflects a growing trend we're seeing across the entire transportation sector. Investors are paying more attention to a company's environmental impact these days.
So this isn't just CPKC trying to be green. It's a strategic move to stay competitive and attractive to investors who are increasingly prioritizing things like ESG, environmental, social, and governance factors.
Precisely. It's about long-term viability. Now remember that legal battle in Mexico we touched on earlier, the one about that tax assessment.
Oh, yeah, that was a big one. What was it again?
Right. So it seems there's another legal matter, this time related to a 2014 tax assessment. The Mexican tax authorities slapped CPKCM, which is their Mexican subsidiary, with a pretty hefty bill.
How hefty are we talking? Give us the numbers.
As of June 30th, the assessment was sitting at a cool $459 million, including penalties and interest.
Ouch. That's not chump change. What's CPKC's take on all of this?
They're not happy about it, to say the least. They've been fighting it in court, arguing that the assessment was delivered improperly and challenging its legitimacy.
So there's a chance they could overturn it completely.
That's what they're hoping for. But it does beg the question, what happens if they lose this tax battle? Could it derail their financial progress?
It's definitely a risk factor that investors should be aware of. If they lose, that $459 million hit could have a significant impact on their earnings. It makes you wonder if they're factoring that into their projections, right? Speaking of which, we can't overlook CPKC's own outlook for the future.
Right, their crystal ball time.
Yeah.
Always interesting to see how companies view their own prospects.
And they are projecting some strong growth for the rest of the year and beyond. Aiming for high single-digit revenue increases seems pretty optimistic.
They do, but their optimism relies on a few key assumptions. One of those being a Canadian dollar to US dollar exchange rate of $1.35.
Ah, the always fun world of currency exchange. For anyone who might not be familiar, the Canadian dollar is often called the loonie.
Right. And if the loonie strengthens more than they're anticipating, it could really throw a wrench into their revenue projections. They're also assuming a diesel price of $4.15 per gallon.
Which, given how energy markets have been lately, is a bit of a gamble.
For sure. It seems like CPKC's future is a bit of a choose-your-own-adventure right now. They've got momentum, but there are definitely some obstacles on the tracks ahead.
That's a great way to put it. It really highlights an important takeaway here. CPKC's success isn't a sure thing. It depends on this complex interplay of internal factors, those external forces, and maybe even a little bit of luck.
And speaking of luck, let's hope that Mexican tax situation resolves in their favor.
I second that. We've covered a lot of ground here today, from revenue growth and operational efficiency to sustainability initiatives and legal battles. We've only scratched the surface, though. There's always more to uncover with a company as multifaceted as CPKC.
You said it. These reports are like novels, just full of twists and turns.
But before we get too carried away, let's take a quick pause here. We'll be back in a moment to continue our deep dive into CPKC's Q2 2024 earnings. And we're back. We've been digging into CPKC's Q2 2024 earnings, looking at revenue, operational efficiency, and even some of the less obvious stuff buried in their reports.
It's like a treasure hunt sometimes, right? Sifting through all these documents.
Totally. But that's part of the fun. So what's really stood out to you so far? Anything particularly pique your interest?
You know, it's the contrast, really. The contrast between their sustainability investments and that big legal battle in Mexico. On the one hand, they're pledging to make some serious cuts to their emissions, which, by the way, is a smart move, not just ethically, but strategically.
Totally.
Yeah.
Investors are definitely paying attention to that kind of thing more and more these days.
Exactly. It shows they're thinking long-term about the viability of their business in a world that's demanding more sustainable practices. But then you've got this massive tax assessment hanging over their heads.
Like a giant question mark on their balance sheet.
Exactly. If they lose that case, it could have a major impact on their financial stability. It's a fascinating dichotomy, almost like they're being pulled in two opposite directions.
It really highlights just how complex it is to run a major corporation these days. They're trying to juggle financial performance, environmental responsibility, legal challenges, all at the same time.
It's a balancing act, that's for sure. And how well CPKC manages all these competing priorities will really shape their future.
No doubt about it.
Yeah.
So let me ask you this. If you could ask CPKC's leadership team one question right now, with all this in mind, what would it be?
Given all the uncertainty around that Mexican tax case and the potential financial hit, are they considering adjusting their growth projections or their capital expenditure plans at all?
That's a great question. It gets right to the heart of how external factors like this can impact their strategic decisions.
Exactly. And it's something that any smart investor should be thinking about too.
Absolutely. Because CPKC's story is far from over. This quarter's earnings are just one chapter in a much bigger narrative, right?
Well said. And I'm very curious to see how it unfolds.
Me too. Speaking of looking ahead, CPKC did provide their outlook for the rest of the year, and they are projecting strong growth, aiming for high single-digit revenue increases.
They're definitely feeling confident.
They are. But, and we've talked about this a bit, their projections do rely on some pretty specific assumptions, like a Canadian dollar to US dollar exchange rate of $1.35
Right.
and a diesel price of $4.15 per gallon.
Those are pretty specific, and we know those markets can be anything but predictable.
Exactly. So while they're projecting confidence, it's important to remember those projections come with a degree of uncertainty.
It's all about understanding what could go right, what could go wrong, and what that means for their bottom line.
Which brings us back to something we touched on earlier, CPKC's commitment to reducing their environmental footprint. They set a target to reduce locomotive emissions by a pretty impressive 36.9% by 2030.
Ambitious goal, for sure. But how does that stack up against their competitors? Are they leading the charge here or playing catch-up?
That's a good question. And to really understand how significant this commitment is, we need to dig a little deeper.
Yeah.
What specific initiatives are they taking to achieve those reductions? New technologies, upgrading their fleet, alternative fuels.
It's about the how, right? Because sustainability often comes with a price tag.
That's true. But it can also lead to cost savings in the long run, not to mention a stronger competitive advantage. It's about finding that balance, weighing the short-term costs against those long-term benefits. And of course, keeping in mind the expectations of investors who are really starting to prioritize sustainability.
It's a balancing act, no doubt.
It seems like CPKC is walking a tightrope in a lot of ways right now, striving for growth, navigating these external challenges, investing in a more sustainable future.
It's a lot to juggle. Only time will tell how they manage it all. But that's what makes following a company like this so interesting. Never a dull moment.
And there you have it. Another deep dive successfully completed.
I'd say so. We really dug deep into those CPKC earnings this time.
We did. From revenue growth and operational efficiency to sustainability and, of course, those legal battles brewing in the background. We covered it all.
It's always more interesting than just looking at the numbers on a page, isn't it?
Absolutely. But speaking of those numbers, for anyone who wants to explore those reports themselves, you can find links to all the source documents down in the show notes. I always encourage everyone to do their own digging. You never know what might catch your eye.
It's true. There's always something new to discover. And hey, maybe it'll even spark a new question or two. Speaking of questions, remember the one we talked about? The one about that Mexican tax case?
Oh yeah, that's a big one.
How might the uncertainty surrounding that case impact CPKC's future plans? Something to ponder.
Definitely something to keep in mind as we watch this story unfold, because ultimately CPKC's success, or lack thereof, isn't happening in a vacuum. It's all connected to the broader North American economy, global trade patterns, the whole shebang.
That's what makes it so fascinating, though. Their performance impacts so many other businesses and industries.
It's all connected. Well, on that note, I think it's time for us to wrap up this deep dive.
Until next time.
Thanks to everyone for joining us for this journey into the world of freight and finance. We hope you learned a thing or two, and most importantly, we hope you stay curious.